Welcome everyone to today's panel discussion on preserving your legacy, technology readiness for small business M&A. I'm your host, Alina Atkins, and today's discussion is going to focus on preparing your business's technology for a successful acquisition. You will learn what investors look for in IT systems, how tech issues can impact valuation, and what steps you can take now to boost your company's M&A readiness. So this is perfect for small business owners who are planning for exit, growth, succession, but it is also important for just employees to learn the importance of technology in your business and how it can benefit you as well. So today we have with us James Becker, who is a partner at Whitewater Capital Partners and Hampton Cokeley, Netranom's new CEO. I am going to let them introduce themselves. I believe they would do better justice than myself. So James, if you wouldn't care to start us off, do you care to give us a brief background of who you are?
Sure. James Becker, I'm a partner with Whitewater Capital Partners. My partner, Max Knapp, and I started Whitewater about a year ago in April. We're focused on what we call the lower middle market. So generally companies with 100 million in revenue or less we're industry agnostic. So we look at all different industries, but typically aren't focused on what I would call oil and gas or extraction like coal. So we look at a lot of different industry sectors, and typically we're often brought in the context of one owner wanting to transition their business either to a management team that's already at the business or is looking for a potential buyer of the business. And we come in as kind of a capital solution to help that transition happen. We also provide growth capital for businesses, so businesses that need an equity injection or a partner to help grow their business. We also provide that as an offering. My background specifically, so I came from another private equity firm called Station Partners outside New York City. I'm from Charleston, West Virginia originally, and Whitewater's primarily focused on West Virginia. Before I was at that prior private equity fund, I worked in law and investment banking, and really wanted to get back to West Virginia and felt like there was a capital solution that was missing in our state, which was a private equity capital. That was the impetus for Max and I to found Whitewater. And so we're really excited to take part today in talking with you in Hampton.
Great. Thanks, James. Hampton?
Yeah, thank you. So my name is Hampton Cokeley. I'm the CEO of Netranom. I've been CEO for about a month now. But in Netranom, we're an outsourced IT provider. Say outsourced, want people to understand all of our employees are in West Virginia. So we're only outsourced as far as, we're not your employees, but we like to partner with small and medium-sized businesses to more or less run their IT department. So everything that their IT you think about it when you think about an internal IT department, help desk, patching, network management, cybersecurity, setting up your devices, troubleshooting, things like that. We do for a small and medium-sized business for a flat monthly fee. So that's really handy for businesses that are looking to grow and eventually exit because it's a predictable flat operating expense. Your business is not super capital intensive, but you get the benefit of a professional IT department without all the overhead and all the expense. As far as my background, I'm originally from Charleston, West Virginia. Also, went to undergrad at the Citadel in South Carolina. Got my career started working for Senator Capito on her campaign in Southern West Virginia, and then worked in DC for a little while, and then did economic development up in Northern West Virginia. Went over to Austin, Texas for a while. Got an MBA because I was when I was working in politics, I found that I really liked working with the business leaders more than the politicians. So got an MBA, worked at Dell Technologies for a little while, then did a stint in investment banking, working on healthcare mergers and acquisitions, because I saw that as a real like James's experience. It's really beneficial to understand that full life cycle of a business. When you're starting a business, you're raising capital. What does that business need to look like to be exit ready? Because every business, no matter what, is either going to sell or close its doors. When you think about General Electric, that was just like a 100-ish year cycle. They opened, they operated, and then they're kind of like winding down. I mean, one day Apple will sell. It could be 100 years, who knows? But one day something will happen to Apple. So understanding that life cycle, working with startups, did a little bit of that. But overall, just really missed being part of a community and local business community, and got a really cool opportunity to come back to West Virginia, working with Netranom to help small, medium-sized businesses really level up their IT departments in West Virginia.
Great. Well, thank you, Hampton, and thank you, James, for joining us today. Before we get into our panel questions, I do want to let everyone know that this is being recorded and you will receive the recording. And so that way it's just a great opportunity if you want to have a refresh from today's panel discussion, or if you want to send it to a friend or a colleague, feel free to do so. And at the end of today's panel questions, we will have a designated Q&A section. So feel free, you should see at the bottom of your screen, it just says Q&A. Click on that and ask any questions that you may have for James or Hampton, and we will get to those questions at the end of today's panel. All right, James, Hampton, are you guys ready?
Ready when you are.
Yeah, ready to love her, babe.
Great. So James, this is the first question for you. From a buyer's perspective, how important is a company's IT infrastructure when evaluating a small business?
So I think the best way to answer that is typically, I think when a lot of people think of IT, they think of just the phones and the computers that they use to run the business on. But really, as you look at businesses today, your IT infrastructure is really what are the systems that I use on a day-to-day basis to run my business, and how efficient are those systems at getting me the data I need to manage my business. So for us, it's really important to understand when we walk in the doors, how do you manage not only your financial management, but your people in the field? What tools are you using as a business to manage your labor force, to manage your payroll, to manage your financials, and not only that, but how are you evaluating it and how are you benchmarking it within your business? And I think critically, more and more IT is essentially providing that function and automating that function in a lot of businesses. So for us, walking into a company, typically what I'm looking at first is, hey, how are you managing your accounting? And hey, is it a cloud-based solution? Is it something I can access from anywhere? Or is it one QuickBooks instance that's running on a single desktop that's in the owner's office that only he has access to? Because that can make our diligence process either harder or easier in getting to a potential answer solution for as a buyer in a potential transition of a business. So for us, it's really understanding, hey, look, what does the infrastructure look like today? What information can I get out of that technology that you're currently running? And is it sufficient enough to answer a lot of the questions I'll have throughout the diligence process? So typically for us, the better systems you're running and the more data it can give us and the more ability we have to cut that data and be able to look at it different ways, the more valuable it is for us and can help us get to an answer quicker in a diligence process.
Great. Hampton, how does outdated or undocumented technology impact valuation?
Sure. So really quickly, I think it'd be helpful to just do a quick, very, very high level primer on business valuation. So I mean, think about it like buying a house. It's typically, it's the number of square feet times a per square foot dollar amount, and how you get that per square foot dollar amount is based off of comparable houses in the area. So your business, it's really, I don't want to get caught up by the valuation police here, but we'll say cash flow or the money the business makes times a multiple. And so the multiple that's applied to that business, it's the same way, like when you're looking at all these different houses, how do you stack up against similar businesses with similar operating profiles? So where technology hits the business valuation is it's really just about hidden risk. What's it going to take to integrate this business, whether it's maybe it's being just held by a private equity firm, then the question is how well can the business execute on its value creation plan, or how it's going to grow its cash flows. Or if it's being purchased by a larger company, how well can it integrate into their systems? I mean, the road to riches is littered with failed integrations because company A bought company B and the systems were just completely incompatible and they had to go like rip and replace a ton of stuff, and they're taking multi-billion-dollar losses. I mean, yeah, you can Google just tons of examples of large companies that M&A processes falling apart. But some of the areas, I mean, they're talking about hidden risk, higher transition costs, and then key person dependency. And a lot of this, it's just in people's heads. So the key to this is you really need to have, so for key person dependency, you need to have better documentation for this question of growth, hitting this value creation plan. You need to make sure that your systems really line up with that growth story, so that if you're talking about growing sales, you need to make sure that you have a CRM. You need to make sure that you have an enterprise resource planning software system. You need to also watch out for technical debt. I mean, a lot of outdated IT systems, that's kind of valued the same way that financial debt. So just as if you took out a loan you have to pay back, if you're skating on old systems, then that's something that has to be replaced with a new buyer. That new buyer is going to price that into the valuation, because they're going to have to, just like you're buying a house and you didn't replace the roof. If the first thing that person has to do is go replace the roof, that's going to be factored into the purchase price. So really, we said it's about hidden risk, these higher transition post merger costs, and then what kind of other risks are in business.
James, what are the most common technology-related red flags that you have seen during due diligence?
Yeah, I'll give a simple example. Probably about a year ago, my partner and I were looking at a company, and we asked the question of, how do you look at your business on a monthly basis? And then he said, well, I just print out the bank statement and I see where cash is. And we're like, well, do you have QuickBooks so that I could kind of like see, what the monthly financials are like? And he's like, no. Here's basically 12 months worth of bank statements, and I get a tax return done at the end of the year that's prepared by my accountant based on these bank statements and the invoices I send out, and the invoices I pay. And I said, I said to Max, we're never going to get to an answer where we're going to be comfortable potentially buying this business. So, I mean, the biggest red flag is, it first comes down to like, what accounting software are you running? And what's the technology that you're using to support that accounting software is another answer too. If it's a computer from 1989 that only prints out stuff through a printer that I have to go physically pick up and then basically scan into my computer and then cut it through Excel my own way, like that's going to take forever to get through a diligence process. And I'm going to say to myself, is this a headache I really want to take on, even though it's a great business? Or, is my time better spent on other opportunities that we have? So typically the biggest red flag we come across the most is typically your accounting or financial software, whatever you're using to manage the business. That's the biggest red flag that we come across first, and is the most likely to kill a deal quickly.
Hampton, what does technology hygiene look like to you in an ideal acquisition target?
Yeah, it's technology hygiene. What we're talking about here is how it's really a kind of a canary for how how seriously the business owner takes smooth operations. Like, do you take care in every aspect of your business. So what that means, documented systems. Does your business have a modern architecture? Modern architecture means it's more scalable, it can handle modern applications. And do you have good security practices and a clear governance structure? So documentation, we're talking about standard operating procedures for your technology. What happens? Do you have like a disaster recovery plan? Are there architecture maps? That's really handy. I mean, I can tell you how many times at Netranom we will go into a business. Sometimes we'll go into businesses that have existing providers. Sometimes we'll go into businesses that we're just starting from a ton of Best Buy purchased laptops, and it is awesome. Whenever we go into a business and they've got an architecture map, we can just see what we're working with versus creating one of those from scratch. And we're not acquiring businesses, but you can see where it's about the same. We have to work with that IT infrastructure just the same way that, say, if you were bought by a larger company, they would have to work with your IT infrastructure. And then your tech stack. How many do you have cloud-based applications, or are you running maybe a legacy? There's nothing necessarily wrong with running an on-premises application. It's just, is that outdated? Is it still supported? Well, there's a customer we're working with where they have an on-premises solution for something, and it's missing a ton of features, a ton of modern features that people really appreciate. James knows what I'm talking about, and so they're moving to like a cloud-based platform, and it's going to be a night and day customer experience. So this isn't just IT, it's not just impacting you and how your workflows, but it impacts the customer experience that you can provide to your customers. Integrations, can the software that you're working with or the technology that you're working with handle integrations with all these other modern applications? Let's see. Security. Do you have a modern security practice? I can't say enough about security. Just did a panel at the West Virginia Manufacturers Association on cybersecurity. Does your business enforce multi-factor authentication? I mean, multi-factor authentication, I'll be the first to say, is a pain. I mean, if my phone is dead, I can't get into my laptop. But I received a multi-factor authenticate. I have multi-factor authentication set up with my credit card, and I gotta hey, text whatever to this code to approve this purchase. And they didn't necessarily have my password, but I was able to just decline it. Whereas they would have just in the past they would have just run with it. Are you patching your infrastructure? Do you have backups running? Are those do you have a local backup? Do you have geographically diverse backups? Do you have endpoint protection? And are you up to date with any kind of compliance that you are subject to, such as HIPAA? And then governance, do you have a good asset inventory list? Do you know what IT you have? We've run into this before where there are devices just kind of in closets, or like somebody's got to bring your own device. They bring their own personal device they're working on, whereas other people are working on company devices. It's just kind of all over the place. Do you have a good asset inventory list, and is there discipline there? One really big thing, an IT roadmap. We're working with all of our customers to create IT roadmaps so that they have some sort of a 3 to 5 year predictability when it comes to their spending on infrastructure. If you come to, I mean, James, I don't know if you want to comment on it, but if you come to a potential buyer with an IT roadmap, we have this value creation plan. Here's what we think we can do to hit these gates, and this is how much it's going to cost us because we're going to implement this CRM, this ERP. I mean, you're going to be light years ahead of the guy who prints out his bank statements every month. And then just a simple one, license management. When I was working a startup, ran into this all the time, where people just have licenses that they're not using. So you're just wasting money on software. Make sure that's all squared away. Biggest thing, IT ownership. Does someone own the IT function? Is there one person, even if they're an office manager, are they at the end of the day even if they're an office manager that works with an MSP, are they the person that is accountable to it all working, versus like nobody really owns IT and it's all just kind of in various drawers and shelves and files? You got to have one person that owns it. So yeah, documented systems. Is your architecture modern? Do you have good governance in place and good security practices? That's ideal tech hygiene.
Great. James, what kind of documentation or reporting impresses buyers during the vetting process?
Yeah, so piggybacking on what Hampton was talking about, um, adopting what I would call your latest industry best practices in terms of software that you're using to manage your business, um, is really impressive when we walk into a business and let's say you have a cloud-based CRM and management software system that you can access from anywhere in the world, and I can sit at my computer at home and be able to log in and see what's happening at the business in real time. I mean, that to me is like the gold standard of, hey, look, like I have super great visibility. I would say, the only thing that I'll look at during diligence in terms of that is A, can I understand this software? And B, what's the integrity of the data that's going into it? So, who's putting what numbers in there? How are they doing it? What's their system for making sure that whatever's getting reported is actually clean? Because the system you're running the business on is only as good as the data that you're putting into it. And so making sure you have good processes around how the information is getting into the data system and that data that it's reading is accurate will be important for me through the diligence process and understanding that. So yeah, that's generally what we look for is, where are you on the level of pen to paper versus like, I'll call it fully automated systems. Like that's what we want to evaluate during the diligence process from an IT perspective.
Hampton, and we've kind of talked about this already just a little bit, but how important do you think is cybersecurity, even for small operations, in the eyes of private equity or other investors?
Oh yeah, it's absolutely critical. And you don't need to have necessarily like a perfect system, but you have to at least adhere to basic standards. Are you using multi-factor authentication? Do you have input protection? Are you patching those devices on a regular basis for any kind of vulnerabilities? And most importantly, do you have backups? Because if you don't have backups, if you can't like spin your system right back up if there's any kind of ransomware threat, then you're going to have operational disruption, and business interruption means you're not making money. And if you're not making money, then the investors aren't making money. So biggest thing, I mean, talking about business interruption, compliance, I mean, legal exposure, really cybersecurity. It's about what kind of ticking time bomb am I purchasing a ticking time bomb? Are we complying with, say, HIPAA? I mean, if you have a buyer that buys some kind of medical facility and let's say a dentist office or something, and they're just completely fast and loose with files. They're using Gmail to schedule appointments or something like that. Then you know that is a huge threat to your investment. And if the lower the risk, then you're just not going to have to price it in. There's more risk, you're going to get a lower multiple. Of course, there's reputational damage. Trying to think of, we recently ran into a business in the area that sent out phishing emails to everybody. It was like an invoice, and we won't get into a lot of the details, but not affiliated with us. But um, you're gonna second guess whenever you get an email from them. I mean, you're like, and as far as I know, they didn't really do anything about it. And then, of course, like insurance costs, if you have breaches and you're not doing things to qualify for quality cyber insurance, then you're going to have higher premiums or possibly even denied coverage. And if you don't have cyber insurance, that excludes you from a lot of opportunities oftentimes. One big area is supply chain risk that a lot of companies look at. I mean, just like I talked about getting sent an invoice email, a lot of larger companies, and especially the government, are looking at your cybersecurity standards when it comes to you as a vendor, or not necessarily vendor or a customer of theirs. Um, if you're the one example I'll use, this isn't really a large example, but in my personal life, I was working with a contractor on a house who was telling me this story. He's like, "You're in IT," and this is when I was working for a startup. I was like, "I really don't know anything about how to fix computers, but try me." Um, but he's like, "You're in IT," when I was running finance actually, but he got phished, and it was like a $40,000 invoice where they had gotten into his network. maybe on his laptop. They've been sitting there watching. They created an exact invoice that was exactly the same as the invoice of one of their vendors. And the only thing that was really different was the email that the invoice came from. And this is a small, just general contractor, construction operator over in like Virginia. And he pays um, this $40,000 invoice, and it's just gone. And if he just had, like, we use Inky, if he just had some kind of tool there that would have told him, like, hey, you don't get emails from this email address a lot. This looks fake. It would give him pause and go, wait, oh yeah, they switched these letters around. This is spelled incorrectly. Well, maybe I should give this company a call and see if they actually sent me this invoice. So yeah, reputational damage, insurance costs. I mean, it's really across the board with just the ever evolving threat landscape. And then, of course, integration risk. If you have weak assets that are running on old operating systems, I mean, again, it's just going to take a ton of money to get you up to speed to integrate you with a larger company that's running best practices. So, cybersecurity, it's paramount.
Right. James, when you're reviewing a company, how much does reliance on one single IT person or a vendor factor into your risk assessment?
Yeah, so I think that really for us depends on industry. Certainly, there are certain industries that are much more, I'll call it security reliant than other ones. So if you think of like a bank or a hospital, like they're dealing with a lot of what I would call regulated protected data. So what are the processes that they use to protect that data? Are they adequate and up to industry standard, or have they not, invested in that? I would say, I'd expect a bank or a hospital system to not necessarily outsource that entire IT function. Maybe they outsource a little bit of it for some branches or something, but they probably have a dedicated IT office and it's probably not just one person. And they're probably managing that, pretty robustly, especially if they have HIPAA data that they're managing or personally identifiable information at the bank. Um, and there are a lot of businesses that fall within a spectrum of, the highly regulated to the not so regulated. And for us, it really looks like, hey, what's the data that you're getting from the customer that potentially needs protected? Certainly, you're getting payment data. So at some level, every business is getting paid or making payments. So it's like you probably need to have some sort of protection process around that. How robust that is, I think, just depends really on what industry you're in, how you're handling it, how big you are. So we really look at it. It's not like a single answer. It's more of an evaluation of like, hey, what are they doing right now? Where could they be better? Are there any gaps in the system? So yeah, for us, there's not a single answer depending on it. It's really industry dependent and situation dependent.
And to go off of that, James, do you typically recommend sellers complete a technology audit or a risk assessment before going to market?
So I would say if you believe you have never had a security incident, you're probably wrong. I don't think there's a single company I've ever come across that hasn't had something happen. And if you believe that you are the company that's never had a security incident, you probably have one right now. There's probably someone in your system looking at something. I don't know. I mean, I probably get like 3 or 4 phishing emails a day. I think we all get them. And, I know my mom clicked on one the other week and someone took over her email account and was phishing all of her contacts. So, I mean, it's happening constantly. It's happening all the time. I would say if you haven't done a risk assessment of your business, you should probably just look at it, even if it's just for your own peace of mind, even if you're not doing it pre-sale, but understanding what incidents you had. Because for me, um, I maybe or maybe am not going to do a technology audit, but I certainly am going to be looking at what your security practices are. And it's better for you to be upfront with me and let me know, hey, look, we've had these incidents in the past. This is how we fixed them, rather than me finding it and going like, why didn't you tell me about this? Because that's a lot tougher conversation to have than if you're upfront with me and know what's going on within your IT stack. So that's how I'd answer that question.
Great. Hampton, what advice would you give to a small business owner who's looking about 6 to 12 months out from a potential sale in terms of tech readiness?
Yeah. Hey, first thing I'd say is start earlier. 6 to 12 months out. I mean, you can do it, but that's a pretty tight timeline um, on top of running your business. That's why in larger companies they'll hire sell-side advisors, investment banks. It's the only reason these guys have jobs. There are other reasons why, but it's a big reason is because they focus on the transaction. But anyway, not to go on a tangent. The big takeaway here: buyers aren't necessarily looking for perfection, but they are looking for predictability, right? Like it's if I buy this, is this a ticking time bomb? What am I getting myself into? I keep going back to the house analogy because I just bought a house. It's the question I was always asking myself: what am I going to be on the hook for? I don't want to go in here and find an absolute black mold nightmare. And that's the same thing with IT. And really, we could do this same webinar for every aspect of business. But I've got a good list here. First, inventory everything. I talked about that full asset inventory. You want to know what hardware you have, what software you're using, and for what, any kind of cloud platforms, licenses that you have, like what are the terms on those, and then all of your IT vendors. You want to have renewal dates documented, the cost of that, who cost and like the ownership of like if you have any devices that are not necessarily owned by you, like if you have hardware as a service, HOSD, call them HOSD, hardware as a service devices like that you don't necessarily own. What this does is this shows that you are very diligent and reduces surprises. You want to modernize your key systems. So any systems that you have that are end of life, doctors' offices are notorious for this. Old medical records platforms from the 1950s that ran on full room computers. Those they don't integrate well. So you got to try to stay away from end of life software, and where you can, or not really, you really should just do this everywhere. Replace spreadsheets with commercial tools like a CRM. We use HubSpot, or and you want to try to get a lot of stuff off of spreadsheets because spreadsheets they're very prone to breaking. So if stuff's more modern, that means that it's more scalable, right? Like because part of this value creation plan, the whole reason that they're buying your business is not so that your company can just completely stay flat. It's to grow the business. A lot of James's their value creation strategy is modernizing the tech stack so that you can run a modern business on a legacy, what's typically thought of as a legacy industry. So you have to have a scalable system. You want to clean up access and credentials. So you don't want to have that's one thing that we do at Netranom. We regularly kind of meet with the customer and make sure that the people who have access are still with the company. You'd be surprised. You don't want so and so to have access, a former employee to have access to their email inbox, for months or worst case or years after they've been terminated or left the company. Document who has admin access to these different software platforms and why. You want to change around generic passwords. Ideally, have a password manager like OnePassword. And then I keep beating a dead horse here, but enforce multi-factor authentication. Centralized documentation, going back to the standard operating procedures, network diagrams, backup policies. If it's in your head, write it down. That's a big thing. You want to fix the quote IT guy problem. We'll meet with a lot of customers who have a guy or gal who just like handles IT. The problem with that, even if it's in-house or outsourced, and this, of course, I would say this because I'm running the IT MSP, but when you think about it, this is true for anything, whether it's your finance manager or your operations leader. If it's all in their head, that's a huge risk to you. They could quit tomorrow. They could burn the whole thing down. So you have to, if you're going to have one person, you have to have a tech handoff guide. At least you have to have all this documentation. I can't stress enough, backups and disaster recovery plan. It needs to be tested. The backups need to be automated. They need to be offsite, on-site as well, geographically diverse, so that a natural disaster or a terrorist attack can't take them out. have a simple disaster recovery backup. Mentioned licenses, tidying up your subscriptions. We used a platform called Cleedara at Iconic Air, the previous company where I worked, and that helped us keep track of software spend and usage. Happy to talk about that later. This isn't an infomercial for different softwares. You want to standardize billing. You'll get a lot of customers who will go out and use their company credit card, and you'll have people buying software on different credit cards, and then they're paying for it, but you don't really get it's just a headache for your finance manager. Review your security posture. We already talked about all of those cybersecurity standards. Standardize your devices. Really avoid bring your own device for employees where they're bringing their devices from home, because who knows, they could be a big LimeWire fan and downloading malicious cat photos or whatever on a regular basis, and that comes on your network, and then it's game over. And most importantly, we talked about this a little bit, but align your technology. Make sure that your technology stack aligns with your business story. Like if you're talking about growth, your tech stack needs to be poised for growth. You need to have a CRM for your pipeline. If you're planning to add a bunch of customers, you need to have a help desk system built in there. You're like, oh, we're going to have 3x. You should probably have a way to aggregate this data for dashboards and key performance indicators. So I've run into this before where I've worked with companies that have modeled out a ton of growth and there's like no increase in headcount or IT spend or anything. And I'm like, where's all this growth going to come from? Just like sweat equity. It's not going to work. So make sure that your tech, the story of your tech aligns with your growth story.
All right. And for the last question that we have, I wanted to ask both of you. James, you can start first, but for those in the audience who aren't planning to sell anytime soon, what advice would you give them about using technology strategically, not just to prepare for a future sale, but to actually grow and strengthen their business today?
Yeah, so I think I'm asked this question a lot by people who aren't necessarily thinking about selling today, but they're like, hey, in the next 5 to 10 years, I know I'm going to want to monetize my business in some way. I think, at least for the part of the market that we play in, which is the lower middle market, it's rare that someone's going to show up and hand you a bag of cash and the next day say, hey, look, just walk away and go retire to the beach. Typically, there's probably going to be a transition period. There's probably going to be some contingencies within that purchase agreement that, hey, look, you need to hit certain metrics on your way out the door. I mean, it could last 1, 2, 3 years, depending on industry and quality of your business. I think generally what I try to tell people is almost construct your business so that it doesn't need you in the future. Especially if hey, I'm not going to sell to a competitor that already has a management team in place. If I'm selling to someone who has to take over this business one day, it'd be great if I already had a management team in place that, hey, look, if I just stepped away for a week, they could probably run this pretty seamlessly. And I think about your technology as an extension of that. What processes can I automate? Am I doing all my billing and invoicing by hand? Because there's technologies out there like Bill.com that you just take your invoice and scan it into the system, it reads it and automatically puts it in your QuickBooks and tees it up for payment. I mean, systems like that can make your life, or at least your accounts payable clerk's life, easier, are things you should be adopting now, regardless of whether you're thinking about selling or not, because it's probably going to take a headache off your plate and free them up to do other things. So anywhere in your business that you feel like you can automate, I guarantee if there's a manual task in your business, we're in the age of AI, there's probably a software or a low code, no code solution that can automate some of those tasks. So again, I think it's just looking at your business strategically and knowing, hey, look, I almost want to work myself out of a job eventually one day. And that's where you're going to really maximize, I'll call it the bag of cash that shows up on your doorstep one day when you decide to sell. So that's how I would think about technology. If you're thinking about a roadmap of when I'm going to retire.
Hampton, do you have anything to add?
Yeah, I totally agree with James there. You want to focus on automating repetitive tasks and focus on creative tasks. Think about how you can free up your team to do the work that only humans can do. Because when you can get more efficient, that creates more margin, and you can do things like, I mean, you can pay your people more, you can attract better talent, and with that can really fund growth. You can get a lot of efficiency out of automating these tasks, and totally agree with James. There's all kinds of low code, no code, or just great software out there. Like we use I've in the past used Brex for you could for billing. You can forward bills and receipts and handle all your accounts payable, accounts receivable stuff through there. Um, try to turn cybersecurity into a competitive advantage as part of your company's story. Really focus on talking about how secure you are so that you can be a part of these more competitive supply chains. Uh, treat treat IT like a department, not just a vendor. One of these podcasts that Lena and I did talking about the different buckets of your business that you should focus on, talking about how you should give IT the same care and attention that you give to finance, operations, go to market function, because it's the wheels on which everything else runs. You want to have regular strategic conversations about where IT and technology can take you. Not just, oh, how do we just deal with IT as an afterthought? It's this thing that just keeps breaking. Make it work for you. Standardize. Try to standardize your IT tech stack. Like you have 50 different. So you have 50. You're going to grow to 50 employees. Like, don't wait to have somebody manage your ecosystem once you have 50 employees and you've got HP, Lenovo, Dell, whatever you bought at Best Buy. That's just way harder to work on. I mean, think about just lean manufacturing. Keep minimize the variability, and you're going to cut down on service time. So if you have like one type of laptop for this type of employee, one type of laptop for this type of employee, and you tell that story, how about how quick, it's like a NASCAR pit stop, fixing any kind of IT downtime, that's going to really help your business. Look for ways to digitize the customer experience. We talked about that company that's really moving from this on-premises solution to a cloud-based system. You can access this stuff from anywhere. It's got has a lot more features. It's software as a service, so it's being updated and being updated virtually in real time with new features and bells and whistles. You're just gonna If you focus on IT, you're gonna create a better customer experience, and it's gonna be a better story for when you do decide to sell. Because like I talked about a little bit ago, the sales process is incredibly time consuming, and if you're being bogged down and getting up to speed, then you're not going to be able to focus on really telling that story, running around to the different buyers, and you're going to be in the weeds just trying to get ready. So start early. Think about building a business that's just just exactly like James said, building a business that doesn't need you. Because if it doesn't need you, that's going to be super valuable to buyers.
Great. Well, thank you, James and Hampton, for joining us today. We do have a couple minutes left just for some Q&A. And if anybody does have any questions that you'd like to ask James or Hampton, again, feel free to post that in the Q&A chat function. One question we have, and James or Hampton, if you both want to, or one you want to popcorn for this question, how can I assess whether my current systems and data practices would help or hurt my company's valuation in an acquisition?
Yeah, I'm happy to jump on that first. So, I would say typically if you haven't been to your industry conference in a while, there's probably vendors there who are trying to sell you something. And I would say
I know we are.
And I would typically say, part of my diligence process is I go to whatever industry conference is coming up for whatever the company is I'm looking at, if we're getting to the serious stage or have an LOI signed. And I'm just walking around seeing what are the solutions out there that exist and talking to some of these vendors and seeing, hey, look, what can you do and what processes that exist in the business or hurdles can you solve for me? Because I'm going to take some of that knowledge and just walk back to the company and be like, hey, is this something we could do here? Like, and if I was going to do it, what would be the process I would go through, or how would I think about implementing whatever the solution is if I see it as a hurdle? So to me, some of it is just, a lot of people focus on what I would call working in the business instead of on the business. So like what I would say is working in the business is great, but you do need to every once in a while like work on the business, which is like take the big picture and go, what are my competitors doing better than I am? Or what are other people in my industry doing that I could be doing better? And I typically that's how I would look at my IT systems and infrastructure. Like, you hear about AI on TV all the time. It's like, I guarantee there's some sort of AI solution for your industry. And if you haven't adopted it, is it something that's worthwhile for you adopting or not? Is kind of a question for you to answer. But hey, look, it could help you out a lot. So that's how I look at um, current systems and data practices. The other thing is just looking at how you're handling your data and what what's going into that data. So like, what's the process of taking I would say the raw inputs and creating an output? I really want to understand that through the whole diligence process. And if there are red flags as to like, well, is this data actually clean when it comes through, or is this data, wrong in any way? Like, I want to understand that. And the more you can clean that up and know that, hey, look, what I'm getting as an output is actually correct, is very valuable once you get to the seller's table.
Great. Hampton, do you have anything to add?
Yeah, I think that's spot on. Going to industry associations and really, I think thinking of it about it as working backwards, right? Like you don't, maybe more IT focused people would start with, here's building a good stack, and then what do you want to do with it? Think about what you want to do, what you're trying to do. You're at these industry associations and you're seeing what all these competitors are doing or these tools that are being offered. And then yeah, go back to your team and see, are we able to do this? If no, why? And that should do a pretty good job just at face value, or just at first glance, like quick brush. Are we where we need to be if we can adapt some of these latest and greatest practices?
Well, great. That's all the time that we have for today. James and Hampton, again, thank you so much for joining us today. I know for myself, not as a business owner, this was definitely informative, and I hope for the audience that this was a very insightful panel discussion for them. I have included also in the chat function myself, Hampton, and James' email addresses. So if you have any questions, please feel free to reach out. I know James and Hampton and myself would not mind to answer any questions that you may have. And be on the lookout for June's webinar topic. We will be revealing that soon, so be on the lookout for that. So again, James and Hampton, thank you so much for joining us today. And to our audience, thank you so much, and we hope you have a good rest of your day.
Thanks, everyone.
Thank you.
Thank you.
Appreciate it.